My question in general is, what can we learn from the past few weeks with Best Buy as the emphasis, and how can we apply this as a lesson in terms of not giving up or panic selling or any of those, emotions that might arise from a situation like this?
Well, think of it from this point. If you're worried about your trade, you've probably got too much money on that trade. Am I right?
Right.
So if you're like emotionally attached to your money, man, it means you put too much money on that trade. So some of these guys might come in here and see one of my signals that don't really know how we roll, and they'll put their whole account on a trade, and then they'll get mad because it goes against them 40% and they panic. I mean, this is why I say you only want to be throwing like 5 or 10% of your account total out there on these option trades, because you can recover 5%, but you can't recover 100%.
Exactly right.
You're putting fresh money in at this point. You're just on a losing streak. So, I mean, you gotta use your judgment to divide your account up into whatever trades you want to take. But you got to make sure your utilization level is less than what I recommend is 25%. I don't ever have more than 25% of my account on all option trades altogether. If I throw $500 or $1,000 at a trade, I don't even worry about it, because if you're playing with $10,000, $25,000, that's really not much. That's not even a percent of your account. We know right. These option trades can go like 400 or 500% easy in a day or a week.
I mean, really?
Yeah, huh?
I'm sorry. I was just gonna say, could you show this chart with the indicators for SPY?
Yeah. So SPY on Friday, we was given indication back here on June 8th. It wasn't quite probable yet because the shade wasn't red, but it was giving you indication that something was happening. That is a good setup, but it made an entry on that blue dot right there. Let me turn this noise off. And you kind of got stopped out. You didn't really go anywhere. The rule is, once you've made an entry, you got to remain profitable in that bar, or you don't stay in that trade. But look here, on the next bar, we printed a red arrow and a blue entry dot. That pretty much would have told you, if you want to take an option trade, you want to get in a little early, that's cool. Take an option trade, limit your risk. But you could gap down tomorrow. This is why sometimes you would get if you saw this indication right here on a Friday, you go ahead and jump in your trade before market close. And then on Monday, we gap down and you're like 200, 300% profit. That happens all the time. These are the kind of chances you can take with option trade. But you got to remember, we don't have the ability to do anything after hours, and we want to try to have a little bit of a chance of catching it before the premiums went against us. If you try to chase it on Monday after it's already gapped down, you're going to be buying the premium at 3 times what it was on the Friday close. And then, tomorrow we just have a bullish bar, and it's just going to automatically send you into a 40% negative on that position. So option trades, man, it's all about timing. You gotta decide when you want to be early or you want to wait till after it happened. You know what I mean? So sometimes you just got to take a chance, man. That's all. That's all there is to it. Use your expiration as your stop loss so that you don't worry about it. Because we know these option trades are going to go against you at some point or another, even if they went into the profit on your first day. So I just let them simmer, man. I just let them put them on the back burner and try to look at something else. If I want to try to balance my portfolio, if I'm really worried about a bullish week, I'll just go buy the ES Mini on the futures and just scalp it for a little while until I've kind of collected what I've put on those trades that are going against me. And then I'm not even worried about anything. I'm back to a break-even state.
Those blue crosses, are those not target prices, are they?
Yeah, that's your target. That's where you're supposed to be getting out or making your trade free, whatever you decide in your risk management. I like to just, if I got 20 contracts, I'm going to sell 10 of them off at that point. And I haven't made any money because that's pretty much break even when you're selling half your position off. You're just getting your risk back, right? But if you get to your target and you take half your trade off the table, and then a couple weeks later, you done went past the target again, your other options that you made free, you're going to be able to take profit on again later. So take the chance of hanging on to some of these sometimes if you can make them free. I mean, that's like free money floating around.
Yeah, I think my 715s for Best Buy, as an example, they were down 80% most of the time. And then Friday, it completely flipped over. I think I sold it for like 35% profit.
Yeah, but, so you can definitely go from negative to positive real quick.
Well, that's why I think it's a good idea to let your expirations be your stop loss in an option, because you never know.
I want to go back into this statement where I took the trade. It's June. When did I take this trade? I don't remember when I exactly got in. Was it the 24th? What day did we get in?
It's still around there.
Had to be the 18th. I'm gonna go back.
Because it dropped and then it started going up, and then pissed me off.
So let's see.
What the hell you got going on that screen? Jesus.
Well, we all know Lil Whale's a very busy man, right?
God dang.
Here's the proof.
This trade, man. I don't
Lions,
remember.
tigers, and bears and shit, and TikTok versus Instagram reels.
Where do you see all that?
Over on the left.
Huh. I don't know what you're talking about.
That's
Raleigh, close the YouPorn tab off. Turn it off.
Yeah, my bad. Sorry, y'all. All right, so I originally got Best Buy on the 25th.
I gotta go.
Where you going?
My ride's here. Can you hear the sirens?
Yep.
What'd you do?
I don't want to, self-incriminate.
All right, so here's before Best Buy went against me. I got it at $1.84 originally. I think we all did. We all went on the 24th and the 25th. We bought puts. And then price went against me, and I went ahead and averaged in some more. I pretty much let it go against me 60% before I got in some more. I'm not gonna look at it and go from $1.84 to $1.64 and decide to get in. I'm gonna let that damn thing go all the way against me 60-80% before I buy some more. And then I just kept adding to it all the way down to 75. And a few days later, I was able to sell 20 of them off at 95 cents, which was pretty much a 30% difference from 75. I don't remember what it was, but the original contracts I left, and then I sold a few of them off for profit, which ended up being 30% profit. So it's almost like removing risk from your trade if you psychologically put it that way, to yourself. Once you've bought some cheap contracts, I got 20 of them right here, 77 and 74 cents. When I had a day that where price moved, I just went ahead and sold them back off. Now I kept the remaining 10 up here. Remember all the ones that were bought at $1 something? Kept all of those. And then later, I bought some more. It's just buying and selling, man. I mean, these 20-cent moves on these premiums are big, especially when they're 75 cents when you bought them, and then now they're $1. It's kind of a 50% move, right?
Yeah.
Just keep doing that. Sometimes you can just keep going back and forth, and basically you're just throttling your account back to where it was, and you don't even worry about the trade no more. I'm not in Best Buy again, so now I got to wait on premiums before I get back in. I done bought 2 or 3 times. But the ES is moving down on the future side tonight, so let's see what tomorrow brings. I don't know. It might fake us out. It might keep going. What else do we want to look at? We want to look at SPY.
That better go down.
I want to talk about the terminology you're using. You're saying using the expiration as your stop loss.
Yep.
What is, I don't,
So if you want to use your expiration as a stop loss, you're pretty much choosing how long you got until that trade expires and goes worthless.
okay.
So if you got a $10,000 account or $1,000 account, and you put 5% of your account on that one trade, you shouldn't really be worried about it, right?
Yes.
So use your expiration as your stop loss. Don't panic 40% negative and think it's over. I mean, if I'm looking at only losing, $100, I'm not going to be worried about it because that's where I would have set my stop loss on a spot trade. If I'm spot trading and I put $500 on that trade, which is half my account, and I'm looking at taking a $100 stop loss, that's 20%, right?
Yeah.
So I would just go to the option side and use $100 on the contract. If I'm only willing to lose $100, that's what I'm going to put on that option trade. You got to psychologically set your boundaries. If you're only willing to lose a certain, look at everything in percentages, man. Look at it, everything towards your overall balance of your portfolio, and always work on underneath the 25% utilization rule that I have. You know what I mean?
Yeah. No, I got you.
So I got right now I have $2,000 at that total risk, pretty much. Now with a $25,000 account, that's only, I don't know, what is that? What's the math?
8%. I don't know.
20 a week.
Hey, I could give a good example. Is the first time I played a SPY option, it would cost me like $300 and some, and it starts going down, and it ticks down pennies, and you're losing money. And I'm down, I don't know, $150, $200, and I'm like, oh my god, I've never seen anything like it. I'm like, oh my god, I should just sell and get my $100 back. And I thought to myself, I said, well, I got another day, screw it. If I didn't want to lose it, I would have played it. So I just told myself to shut up. And then the next thing you know, it's worth 700.
Mm-hmm.
So that's how I learned you got to understand that if you got the time, the stock's got the time to go up as well. So it's around.
Well, let me show you an example of how these options work on the chain. And you got to look at it from this side. You're buying a contract here at $56. And the next strike is only a $1 difference on the SPY, right? You go from 381 to 382. Think about what that contract would be worth when you get to that next contract. You move one. If the SPY moves $1, you're going from 56 to 67. So that's a 20% move. If you think about that, that's a 20% move if SPY only moves in your favor $1. Once you get closer to end the money right here, which is all in a purple box, these are all in the money contracts. These are already strikes that are already in their money. These are the ones out of the money. If you're buying a 56 and you go to 67, that's an automatic 20% profit on just a $1 move on the SPY. So if you went from 390, let me go to a smaller time frame. Look. Just think of each of these dollars as 20% move on the option chain. So if SPY moves against you $2 today, guess how much percent you're going down?
40.
That's right. So this is why I say use your expirations at your stop loss, because your trade can go against you 40% today and go in your favor 400% tomorrow. I've seen it done 1,000 times. You'd be mad as hell. You go back and look at your premium, and you could have got 400% and you jumped out in 40% loss. So throwing your whole account at the option trades is the stupidest thing anybody could do. You can literally make a lot of money if you're only throwing a little bit of money at some of these trades, because you got a full account. You're not worried about losing everything all in one trade. I mean, I'm going to tell y'all something about only half of my trades, sometimes not even half, work. A lot of these trades are just they'll go against you forever. So they just expire worthless. I wasn't able to make them free. I'm not able to make every trade free, but ones I am, man, they pay for themselves. And the ones you've made free, you come back and collect money on them other ones and make up for the losers.
Hey, Raleigh, what's that red dot above the purple bar?
That's your stop loss.
If I was doing what?
If you're spot trading this, you would be using it as your stop. And being it's a purple bar,
bearish. So if
Huh?
it goes up, that's your stop loss.
yeah. So the red
There
shade
you go.
showing
Thanks, man.
bearish. You're not supposed to enter until you get down here, though, to the blue dot. That's your entry. Because you can get in here and it just bounce off that entry and go back the other way. So Manesh tries to keep you out of the game as much as possible, basically, what this is.